start recording. All right, it's recording now. So today we are going to talk about um, two main things, two big categories. The one is the behaviorism of market,
Mhm.
how the market behaves, and how because of the market behaving, people have um, adapted their strategies and everything to it accordingly.
Mhm.
Okay, and then the
Okay.
perception, yep, and then the perceptionism of the market, how different people use have different perception on the market, like how they see it differently. So
Mhm.
I'll be also sharing some theories with you, and I'm going to explain them how these came up and what kind of tools do people use it in the market.
Mhm. Okay.
So yeah, let's start from the beginning. Behaviors of the market. So there are actually two types of market. One is trending and one is ranging market.
Mhm.
So let me show you that goal first. All right. Okay. So um, trending market and the ranging market, it
Mhm.
happens on both higher and smaller time frame. So if you want
Okay.
to see things very clearly, right? You want to learn things super fast. You should go to
Mhm.
like 5 minute or 1 minute time frame and look at charts from
Mhm.
there, and you will
Okay.
learn about the whole market really quickly. So there are things called fractal. Do you know what is fractals? Fractals are like when things zoom out, they look the same as when you zoom in. So uh,
Fractals. No. Okay.
so if you've seen something like these, so basically,
Mhm.
wait a minute, there are GIFs of these things. I don't know if I can even show it to you on.
So it's like smaller parts of the same thing, you mean?
Yeah, like look at this picture here. When it
Mhm.
zooms in, right, it actually goes back to the actual. This GIF is really bad, but it's something like that. The more it zooms in,
Mhm.
right, it just looks exactly like when it's zoomed out. So that's
Okay.
called fractal. So the market has fractals and it behaves very similarly. So let's look at the zoom out version for now.
Mhm.
Zoom out version, you'll see like market in this area it is trending. No, it is
Mhm.
ranging. You'll see,
Mhm.
and then after a while, it changes into trending market.
Mm.
Yeah.
So
So
it goes up. Yeah.
yeah, it goes up or it goes down. Like it's trending in here. It goes down. It trend.
Mhm.
It ranges. It trend like that.
Mhm.
So um, yep. So when you go into lower time frames, like 1 minute time frame, you will actually see the same thing. Like it's
Mhm.
ranging, trending, ranging, trending, ranging,
Mhm.
trending. So it's somewhat like that. So you need to know like there are two types of these markets, and then um, it's really know when the switch is coming. So basically, the switch of these market on like 50-minute time frame or 1 hour time frame, like when do it starts to trend? It normally happens on the news days. Okay, so
Mhm.
when there are non-farm payroll news or Federal Reserve related news like cut of interest rates or
Mhm.
uh, cut or increase of interest, stuff like that. That will change the market trending or not trending behavior. Also, like previously, if you remember, told you about the news stuffs like wars and major
Yeah.
economic news. Yeah, so even those can change uh, uh, the trend of the market, like from ranging to going up. So
Okay.
yeah, so wait a minute, let me put this down. Okay. Normally you can see it in Forex Factory, red folder news, and those will be the one that will change the market structure. So now that we know like there are two types of market, so how can we use that in our day-to-day strategy, and how can we profit from that? So there, because of this, right? Like for trending market, there are trend probability strategies or indicators. Those would be moving averages, SMA, EMA, and there are more, something like that. So let me show you how they differs. Moving average, and 200. Yeah. Okay. So you can see that you can see it, right? It's
Yeah.
clear.
Yeah.
Okay, good. Um, so you will see like moving average is a trend probability indicator. So in the ranging market, it will have very bad mixed signals. Okay, so you will see like, oh, should I short in here? So the time it shorts, right? It's already really late. It has already been in the ranging market area, and the time it longs, it's a lot of mixed signals, and you will lose money here. But on the opposite hand, when it's a trending market, moving averages can actually be very beneficial. It will show you like, oh, the market is trending, and once it comes out of like your moving average, you can take profit, and then let it do that once again, and then you get in position, stuff like that. So um, this is one of them, and
I got a question though.
yeah,
So when it comes to, these moving averages, SMA, EMA,
yeah,
they're usually like, let's say 50, like it was like 50 with 200.
yeah.
So I'm wondering what's the difference if you change them? Like what does it change?
So why 50 and 200? Because mainly 50 and 200 is used by everyone around the world because uh, when you look at the same parameters that everybody uses, right? It is much more easier to predict the market with that. So usually this 50 and 100, no 50 and 200 is used on daily time frame. On
Okay.
Yeah, on daily time frame you will see um wait a minute. Many times you will see like price will come down to these 50 EMA. They call it 50 EMA and stuff like that. It will come down to it and it will bounce back. So these are normally the pivot points that people pay attention to. Like even in here, if you are shorting the market, it will come back to this level and you will short it once again. Stuff like that. So
Uh-huh.
because the more people use it using the same parameters, the market behaves in a similar way. It could also become a trap because of it. These are really basic ways of predicting the market. Um, like if you're on daily time frame, this could be very useful. Or even on 15-minute time frame, it could be useful. You can see it. But if you are like you can see on 15-minute time frame like right now, market came back, it people would have bought in here, right? But market what market did is that they wiped out people's stop losses that people like to put it beneath it, and
Yeah.
it
So
wiped
the
out.
huge
Yeah,
the huge wick is now is the problem. Like it touches your stop loss.
yeah, yeah, and then it went back up. So
Yeah.
market plays a lot of games. So in here it was respecting this line. It was respecting. It didn't respect much in here, but it did in here, right? So people will think
Mm-hmm.
that it will respect again, but it didn't.
Mm-hmm.
So this is where people was wiped out. So people went wiped out, right? People thought, oh, it's
Mm-hmm.
gonna range. So, but it didn't range. It went higher. So it's a lot of psychology. Market plays a lot of psychology tricking games with people,
Mm-hmm.
especially people that are using too simple kind of strategies.
Yeah.
Um, but it's just a way to see how the market thinks.
Yeah.
So this one is for trend probability indicators. There are a lot of different ones. You can find them in the future by yourself, but these are the popular ones that I'm showing you
Mm-hmm.
right now. Okay, so
Okay.
the other one is also RSI. RSI can be used for both. Wait a minute. RSI can be used for both trending and what do you call that? Ranging market. So, for example, if it's used for trending market, right? Right now in here, uh, the yellow line is the slow line that it has. They call it.
Mm-hmm.
Normally, there's a fast line and slow line. They call it like that. Yeah. So basically, this is the slow line. Slow line is
Mm-hmm.
where the signal comes from once the price breaks it. So the price broke beneath it and beneath the slow line. So this is where people will short, and they will
Mm-hmm.
short all the way till it comes out of it again, and people will take
Mm-hmm.
profit in here. And here in ranging market, it is not so good. It
Yeah.
could be traded in different ways. Like for example, um, what people will do is that they would change the parameters. Wait a minute. 30, right?
Like,
We have here, yeah, upper band 60, something like that. So the other way people will trade is that once price goes above this level, people will short in here
mm-hmm.
and they will short in here again. But when it comes here, they will take a long position once it breaks this level. So
Uh-huh.
this will be the mean reversion use of this RSI. So
Uh-huh.
here you will see it. Let me recap it again. So yeah, mean reversion and trend probability, right? So this will be the
Mm-hmm.
mean reversion version of it. Okay, let's look at MACD now. MACD has almost the same thing. MACD when um, people like to use it in mean reversion way when it goes slightly high, like at these levels.
Mm-hmm.
Levels where you averagely a lot of places are like here, like many times the MACD has touched
It
these
touched.
levels and reverse,
Yeah.
right? So they find these average levels and then they use these for their short in here or longs in here or shorts in here, longs in
Mm-hmm.
here, shorts in here. It works, but it doesn't work always. So these are just different ways of looking at the market and trading
Mm-hmm.
them. I also personally have these version strategies. Okay, That's cool. So this one would be trend probability related.
Uh-huh.
This one is not so clear, so let's out. This one would be mean reversion related. So this one I remember I use it on 5 minute time frame. So
Okay.
it's like when it's green you buy, when it's red you sell, stuff like that.
Mm-hmm.
Um, this one that yeah, these were used on 15-minute time frame. So yeah, shows you where to short, where to long, where to
Oh, okay.
short, where to long, stuff like that.
Mm-hmm.
It's not perfect, so see sometimes it gives you a bad signal.
Yeah.
Yeah, these are trend probability related. It doesn't function well in the ranging market. Trend
It's
probability
better
rate.
for the trending one, right? Yeah.
Yeah, yeah, yeah. So um, it will be best to use of uh, two different strategies that you have, one for trend probability, one for mean
Mm-hmm.
reversion. Um, that will be the best for your tradings because there's no one strategy that could be used in any all kind of market conditions. Okay, let's talk about martingale. Do you know what is martingale strategy? Mart
No.
Yeah, martingale is just like gambling when it's like you're in a casino, right? So you put in $1, you lose $1, you put in $2 to win back the $1. So if you won,
Mhm.
if you keep on going like that with $4, $6, no $4, $8, $16, after there's one time that you win back, right? You're gonna be break even or you might be in profit. So that is called
Mm-hmm.
martingale. The other type is buy low, sell high strategy. So it's different from trading because buy low, sell high is you are not shorting the market. Where does it benefit you to use the buy low, sell high strategies? It's usually in trending market or uh, currency or what do you call that? Assets that have high Sharpe ratio, which is like Ethereum. Uh, Sharpe ratio is something um, like Ethereum.
Like elements, like what? How do they call it?
Ethereum is something like Sharpe ratio is something like it goes up more and down less. So
Ah, okay.
Ethereum, if you look at it on monthly time frame or is it a yearly time frame? I forgot it. It's only like straight line going up, stuff like that.
Mm-hmm.
So versus other markets, you will see which have lower Sharpe ratio, you cannot play the buy low sell high game. So this is one way of trading it. You can also use your strategies to buy low in here, sell high in here, these kind of
Mm-hmm.
stuffs. I have a indicator that's best for it for both mean reversion um, and trend probability trades. So this one would be it. X,
Mm-hmm.
but this one you need to learn how to use it actually. So
Okay.
it's a mix of RSI and stochastic. RSI have this trend probability um, settings into it, and stochastic is
Mhm.
more about mean reversion. Do you know stochastic indicator?
Yeah. Yeah.
Yeah, you've seen it, right? So
Yeah.
what this would be is like you'll see like there are red you'll see like there are tops in here and bottoms in here, right? And you would
Mm-hmm.
also see like there are these middle lines where if price breaks above them, it will become a long trade, or if price goes below them, it will become short trade.
Okay.
So this this I can teach you later, but I'm just giving you uh, like an idea like there is something out there
Uh-huh.
that could work in both market conditions, but it's just like you need to learn how to use it. It's not the
Yeah.
best
Oh.
one, but it's just an idea that you can use later. So,
Mm-hmm.
and then there are long shorts. Long is when long, right? You can buy here
Yeah.
and you can
Yeah.
profit in here. Short, you can sell in here and take profit in here. Okay, types of trading. There's HFT, latency arbitrage. It happens in automated trading. Um,
Mm-hmm.
there's scalping, there's day trading, there's swing trading, there's long-term investing. Have you heard of all of these yet or not?
Yeah. Yeah.
So if you have heard of
Wait.
it,
So, uh, HFT, latency arbitrage. I think I did for the three first. The other ones I did hear about it. The three other top ones, I'm
yeah.
not so sure.
Okay, sure, no problem. I'll give you a quick recap. First, from scalping. Scalping is something you do on a very short time frame, on five
Yeah.
minute, on
Mm-hmm.
1 minute time frame. You get in quick, you get out quick. So it happens within an hour or a few minutes. That's scalping. Day trading is something you do it
Mm-hmm.
within a day, so on 15-minute time frame or 30-minute
Mm-hmm.
time frame. You might be buying into the early of New York session, and then you get out in the late of New York session and stuff like that.
Mm-hmm. Yeah.
That is day trading. Swing trading is something you would hold for a week long, things like that.
Mm-hmm.
So
Yeah.
that usually works on 4 hour time frame to 1 hour time frame. So you would be doing something like buying in here and selling in there. It will be
Mm-hmm.
from March 26 to April 17. This would be swing trading.
Mm. Okay.
And yeah, and long-term investing is something you're investing long-term. You're gonna be buying for a few years or maybe a year or two. You'll be buying
Mm-hmm.
every dip that comes. So normally people use moving averages for um, long-term investing.
Mm-hmm.
Just if you remember the 50 EMA with 200 EMA. So
Mm-hmm. Yeah.
so yeah, so basically, or this one, you will see like, oh, price dipped too much in here. So you would have bought in here, right? So you would want a place where you can buy once again. So that would be in here. So people will
Mm-hmm.
enter in here and let the market do its thing. Same thing in here. People will buy here and here,
Mm-hmm.
stuff like that. That would be long-term investing. HFT and latency arbitrage. These are different types of trading. Why do I put it in this category? Because it's also trading, but it's way faster. It cannot be done manually. It can only be done with um, with your computer software.
Bots.
Yeah,
Okay.
bots or computer software, machine learning.
Mm-hmm.
Machine learning is like the actual AI that learns,
Mm-hmm.
adapts on each new information that it gets. Uh, it's not like algorithm. It's a little different. It learns by itself and it improves. So it's a different thing.
Yeah.
Algorithm is something you just give it settings and then it just follows like a bot.
Yeah.
It does not improve by itself. So HFT only happens when you have a big infrastructure, a big company which is very near to your broker, like
Mm-hmm.
physically near, and you have
Mm-hmm.
like very fast computers, and these computers, and you're using like the internet cores there, have really high speeds. So it's about the speed and a lot of milliseconds that are counted in it, because that
Mm-hmm.
on a very smaller time frame, on seconds, right? So things
Mm-hmm.
move really differently, and you see like you see
Wow.
these gaps. These ga-
Yeah.
these gaps are actually happening because like some people are selling and some people are buying, and they cannot be selling or
Mhm.
buying at the same price. So some people are selling a little higher, some people are
Mhm.
buying a little lower, so they are competing in here, right? S-
Yeah.
Yeah, so what HFT does is that they uh, buy it quicker than you and sell it quicker than you, so you're
Ah, got it.
yeah,
Yeah, yeah.
so you're behind them, and then they profit from these gaps, these currency
Uh-huh.
differences. So
Wow,
they're playing that kind of game.
nice.
Yeah. So that is HFT, and then there's something called latency arbitrage. Latency arbitrage is something like there are two brokers. For example, if you remember, we have FP markets and Robo Forex, two different brokers, right?
Mhm. Mhm.
There might be like on this broker, you will see a price moving in here. On the other broker, price might be still at here. So it
Ah, okay.
so it's not updated yet, but so
Mhm.
because of that, you can predict the future, right? So
Oh,
yeah,
wow.
so yeah, and
Interesting.
in some states this is legal, and so people use advantage of that. In some place it is not legal. So this is what
Mhm.
they call latency arbitrage latencies because some are slower than the other. Arbitrage
Mhm.
is what they call the differences. So that would be the differences.
Yeah.
So
Like,
there's
is it for sure that the market is gonna go the same from one broker to the other?
yeah, it's very sure unless the broker is manipulating it, but rarely they'll be
Mhm.
manipulating it for uh, too much. And
Mhm. Yeah.
usually that only happens with a broker that's fast will be like popular brokers, and broker that's
Mhm.
slow will be like the unregulated bad brokers.
Mhm.
And
Yeah.
people like to take advantage of that, and it is not illegal because I've seen somewhere on the internet it helps make the market efficient or something like that, you know. So,
Really?
yeah, um,
Interesting.
yeah, is latency arbitra- arbitrage illegal? I remember I saw somewhere. Not in here. Yeah, I think I saw it on Investopedia. Why is
Yeah, but I think,
why is it
yeah, I
illegal?
think
Yeah.
it depends in other countries as well.
Yeah, it depends
In
on the
different.
countries. Yeah, it is encourages as it contributes to market efficiency.
What the
Yeah.
hell?
So furthermore,
You use
arbitrage
that
also serve
before?
as
Like,
a yeah.
you did? You have used that before?
Uh, I know people that are using it, but I didn't get into it because um cause I have some demo accounts I can share with you
Mhm.
later. There, you can log in into it and people are doing that. But I haven't used it because the software itself isn't that cheap.
Mhm.
I was about to also show you what software is that.
Okay.
Western Pips 7 here. There are two softwares. One is Western Pips. This one. Wait a minute. So yeah, one is called Western Pips. Is this software? It costs like $1,000 or more, and then you set it up,
Mhm.
and then they would have a feed. So feed is like a good broker or bad broker, I forgot, a faster broker, and you will get a
Mhm.
feed from there, and then you would use it on a broker that they suggest, and you would put your amount on the bad broker, and then the bad broker is where you will trade, and then this Western paper is going
Mhm.
to make you profit based on that. So the software
Mhm.
looks like Looks like this.
Okay.
Yeah, like
Interesting. So it's like you buy this software and then they connect you with a fast broker and a slow broker
yeah,
so that you can become profitable.
yeah. So here it is fast data feed. So this is where you
Mm-hmm.
would put it on,
Mm-hmm.
and then it would be your own broker, and because this you would be running on your own broker first, and then you would put on the fast data feed. Fast broker
Mm-hmm.
will be the other one. Here is LMAX API, stuff like that. This one will be provided by the WP7 themselves, the Western Pips
Okay.
themselves. Yeah. So you would follow that.
Like, is it safe? Is it safe? Because like, if it's a bad broker, then it could scam you or no.
Yeah, that's the problem. And the thing is that you wouldn't use a lot of money in there to begin
Mm-hmm.
with. So that's the thing. And the gains are crazy. You will see like um, within how many days? 12 days, it did 171% gain with only 2.55% drawdown. Crazy.
Wow.
Yeah.
What the hell?
So some people use that for quick money, for small, quick
Mm-hmm.
pocket money, stuff like that. So there's Western Pip
Yeah.
7 and there is DAAS, spelled correctly. Yeah, DAAS trading. Um, yeah, I haven't used DAAS before, but it's another software that is just
Mm-hmm.
like Western Pips, and it helps you um, DAAS arbitrage software. Yeah, this one is not so popular, but this is also one of those that people use for
Mm-hmm.
arbitrage reasons, and this one is also very profitable.
Oh wow.
Yeah,
But it's like it kind of feels like it feels like illegal, even if it's not in your country, you know? Because it's like,
yeah, that's really interesting. Like you'll see on Investopedia, it says it's legal.
yeah, wow.
Yeah. So yeah, that
No, like
huh?
it's like sure you can make maybe quick money, but I don't know. It just doesn't sit right for some reason.
Yeah, you because you're like taking advantage of the bad brokers.
Yeah,
Yeah,
it's strange. Wow.
yeah.
Okay.
The crazy world we live in. So
I know, right?
yeah. So yeah, these are the types of trading, and then let's look into perceptionism. Perceptionisms. There are two different theories of reading the market. The one is first is Eliot Wave, and the second is Wychoff. This takes time to learn, but I'm just going to give you a quick recap, so
Mhm.
it'll be easy to understand. So let's look at Eliot Wave theory. Elliott wave theory is like what they say is market moves only in a very similar way. So let's look at this picture, see if we can zoom in. Okay, you can see this now, right?
Yeah, yeah, yeah.
So let me show you a simple version. This is a simple version. So there are few moves only in the market that in this theory they say like the market only have few moves. Uh, this will be in long on the market that's going on the upside, and this is on the
Hmm.
market that's going on the downside. And it actually behaves the same but just in a reverse. So I'm going to explain how that actually works. So they say the market moves in these few moves only, like one, two,
Hmm.
3, 4, 5. Once it gets to 5, right, it has to reverse to A, and then B going back to slightly above the 3, and then it's going to go back to C, and it's going to go back to 1 again. So you get my point?
Oh, okay.
Yeah. Um, this happens also on smaller fractals. Like for
Mm-hmm.
example, in here, you see the big one, two, three, four, five, A, B, C, right? So
Yeah, and the small ones.
yeah, the small one is like one, two, three, four, five, A, B, C. Then you get to the two, and then it repeats again. So they
Yeah.
say this thing goes on and on and on.
Mm-hmm.
And the same thing happens on the reverse market. One, two, three, four, five, A, B, C. So you get my point? So
Yeah.
yeah. So in the actual market condition, it doesn't look as beautiful as you see on these
Yeah.
charts. Yeah. So they will look something like this,
Mhm.
um,
Yeah.
on YouTube. So yeah, it's not so clear, but it kind of gives you,
I kind of get the point. Yeah.
yeah,
Mm-hmm.
yeah. And you can also see it in here. You need to train your eyes to see it. So
Yeah.
it takes practice. And this is Eliot Waves theory, a theory
Mm-hmm.
in technical analysis that attributes wave-like price patterns
Yeah.
identified at various
I remember,
scales.
I remember this from baby clips.
Okay, good. And then there is Wychoff. Wychoff is slightly advanced version of Elliott wave theory, and
Mm-hmm.
this one is quite useful. Something you would also be needing to use in your future for your high
Okay.
risk to reward ratio um, strategies,
Mm-hmm.
in smart money concepts. So the Wyckoff theory is basically what they say is that in the market there is something called market manipulator. So it's very, in a way, what do you call that? Conspiracy theorist way kind of thoughts, that they have on the market.
Uh-huh.
So they say like the uh, once you can read the charts, you will know what the news is and stuff like that.
Mm-hmm.
So I forgot where the quote came from, but it is from here. But let's forget about the quote. I can show you that in future.
Mm-hmm.
Um,
Yeah.
so this is how Wyckoff theory works. If I can see the actual. Is this clear enough for you?
Yeah. Yeah. This is clear. Yeah.
Okay, so in market that's going on the upside, you will see the market is having these A, B, C, D, E phases. Okay, you would have to
Mm-hmm.
memorize this, practice this to learn more about it. Um,
Okay.
the charts doesn't look so beautiful, but it will nearly mimic this area. Okay, so
Mm-hmm.
you will see price going up here, and it will be ranging and then going back down. But within the ranging, there will be places if you draw these lines good enough,
Mm-hmm.
um, and these lines you will find this area, and you would want to be shorting in this area and or selling in this area if you bought in here, and these will be
Mm-hmm.
the areas where you will get the most profit, and then market will start going down from here.
Mm-hmm.
The same thing for the opposite direction, and there are few versions of these. um, this one is not the most perfect version. This one is the perfect version.
Okay.
um, Market comes down and starts ranging, and this is where the market drops the most, the hardest, and the market likes
Mm-hmm.
to retest these areas, and goes
Mm-hmm.
back down. And people who think that people who might have bought in here, right, it'll wipe them out, and people might
Mm-hmm.
buy in here, so price will go back up, and people will uh, buy in here because they think, oh, market is going back up this time, and it will come back down again. They will even break this level, you know, making the most
Mm-hmm.
most pain in the market, and people are gonna give up in here. but this is the place where they call it spring. Is where uh, market bounces the most, and then it goes to the
Mm.
SOS level, which is above all these previous um, what do you call that,
Points, yeah.
resistance level. Yeah,
Resistance.
and this is where the market goes higher from here. So it will look like
Mm-hmm.
this. So it's above all these levels, and it's gonna go higher from here, and it's gonna uh, yeah, it's gonna trend. So I've seen this a lot in Bitcoin before,
Mm-hmm.
so I can, cause, it's easier for me to pinpoint it in Bitcoin. So see here, okay, this one. Market went up and started ranging. Market went up,
Mm-hmm.
started ranging in here
Mm.
at it point 0.1, point 0.2, point 0.3, point 0.1, point 0.2, point 0.3, right? And
Yeah.
and then they have these level AR, SOW.
So that's like support levels. I remember the resistance one.
Um, yeah, you can take them as support and resistance, or you can go into details of Wychoff theory, what these level actually means. The
Mm-hmm.
BCAR, they have
Mm-hmm.
they have details on it, like what is the market doing in here, you know.
Yeah.
You
I
can,
like this. I'm gonna go through this, yeah.
yeah, you can go through that later. Um, uh, the, I think it was Investopedia. I forgot. There, either way, there's a place where there's a lot. See, like they have all these details in here. What does PS mean? SC means, you know. You can go
Mm-hmm.
through that, and it's going to be really beneficial.
Nice.
So, um, yeah, and this is the top area, UT80, UT80, and then price came back, and then SOW is
Mm-hmm.
below this level, SOW, and price started to going lower. And then it did the reverse one, and see, here's the spring, and then
Mm-hmm.
it went to SOS, and it retested in here and went higher from here.
So
So
it seems like the market is gonna close exactly where it started. Like at some point, it's gonna close where it started.
where it started? What do you mean where it started? I don't get it.
For example, yeah, like for example, the one, let's say the trend started from um well, I don't know, like I would have to touch it with my with my thing, but
Okay.
what I'm trying to say is that when the trend starts
Mm-hmm.
and then it has to come again down almost to the point where it started. So it's like it's kind of interesting to see. That's why I want to know more about it.
Um, yeah, cause on the grand scheme, right?
Mm-hmm.
There are always these support and resistance levels.
Mm-hmm.
Price like to touch them. It comes back to the fractals again. Um,
Mm-hmm.
and w- the thing is true that the thing that goes up hard in the market comes back down hard in the market. So there
Yeah.
is that average line that's in the market, you will see in here, that goes like this, you know.
Mm-hmm.
Wait a minute. The average line, somewhat like this, and price likes to go above it and below it, you know.
Yeah.
And
Uh,
yeah, so um, yeah, so it's very true, and people also use these kind of things to predict the market, how it's gonna,
mm-hmm.
where's the top gonna be and where's the bottom's gonna be.
Mm-hmm.
So let me show you. There's something called, for Bitcoin, there's something called rainbow chart.
Mm-hmm.
Uh, Bitcoin. So this is the Bitcoin that's moving,
Mhm.
and there's always this mean level for it. So price there are tops and there are bottoms,
Mhm.
and these are the statistical ways to predict the tops and bottoms of the market.
Ah,
And
okay.
yeah, so they have used like these they've used a lot of different tools to make this thing visually possible. So yeah, and it's
Mhm.
true, like things that go up, they do come down, and a lot of it has to do with market psychology, if you remember.
Mhm.
Yeah,
Yeah, yeah, yeah.
yeah. So in a market, there are two types of market participants. There's market makers and there's retail traders. Retail traders,
Mhm.
they just go with the what's going on in the news, what's going on with the hypes. And market
Mhm.
makers, they make the news, they fund the news and everything,
Mhm.
um, and people follow these news. And
Mhm.
because these market makers, they're trading with hedge fund money, big monies like $1 billion or $1 trillion, right? So
Yeah.
for them to be able to sell the top, right, someone has to be buying it, you know.
Yeah. Yeah,
So
yeah.
it's gonna be retail traders, and they have to pump a lot of money into the news because it's
Mhm.
cheaper there, and they can pump money in there like few millions, and it's gonna
Mhm.
make a lot of news, and people are gonna panic buying, and then once they panic buy, right, these hedge
Mhm.
fund traders, they're gonna sell to them.
They're
Same,
gonna sell it, yeah.
yeah, and same thing in the market when it's going too low, right? There,
Mhm.
like market when it was in here, like Bitcoin was when it was in here, there was a lot of news on FTX being
Mhm.
bankrupt and stuff like that, and market was kept on dumping. You know, people
Mhm.
people would think like, oh, this will be the place to reverse and stuff like that. So
Mhm.
market dumps and dumps and dumps. Actually, when average people uh, dump their money, right? Like
Mhm.
in here, it will be hedge fund managers dumping for this level only, or to
Mhm.
break these levels. Once these levels are broken, this will be the retail trader dumping all the market. But this is a very small amount. And in
Mhm.
here, retail traders are dumping, 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 and the hedge funds are buying, 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 buying all the way. And now they are making
Ah.
profit, you know. So
Mhm.
it's actually like um, it's like a game, you know. Both sides
Yeah,
are playing,
it's
you know.
interesting.
Yeah.
Mm.
So that's what's happening. If you look into um, Eliot Wave theory and Wychoff, they would explain that even further, if I remember. In
Mhm.
Wychoff, they would explain that even further. You can look into that. There's something called market maker. They say,
Yeah, I will.
well, yeah. Um, type of tools used for analysis. So, yeah, candlestick patterns and chart patterns. You've looked into those already, right?
Yeah. Mhm.
Yeah, so I'll just do a quick recap because you've already watched how it works. Candle,
Mhm.
candlestick patterns is like the language of candlesticks. You look at them and then you know like what's the market thinking actually, you know. And
Mhm.
people also use these to predict the market, how it works. Um, gonna give you quick important ones. Hammer
Mhm.
candlestick. These are really important
Mhm.
in both bullish and bearish market. If you see this hammer, right, and you see the candle closing above previous two candles, big candle, this will mean a reverse coming. So you can put the stop loss in
It's
here.
like a confirmation that is gonna happen. A reverse gonna happen, right?
Yeah, yeah, yeah. Same thing in here. There are two candles in here, two red candles,
Mhm.
and there's a hammer pattern, and then there are two other candles, or maybe three, which closes above the previous two, and then that will be like
Mhm.
confirmation of price going up. So you can open a trade in here and put a stop loss in here, and it's gonna go up.
Yeah.
Yeah.
Do
Um,
you usually put the stop loss, for example, above this green one, or
Here,
I
right?
mean under? Yeah, yeah.
Yeah,
Do you put it there?
yeah. I usually put it there. This is one of
Mm-hmm.
the strategies that you can use. It is not very sophisticated, but it also works. It is not uh, unprofitable if you mix it with other strategies that you have, right?
Yeah,
And
yeah, yeah.
use it in a quantitative way. It's gonna
Mm-hmm.
be profitable for you because you cannot. Because if you remember earlier, I told you um, the more quantitative analysis information that you have, right, which doesn't conflicts each other, uh,
Mm-hmm.
then the more better confirmation that you would have. So in future, you can build yourself a strategy that would have more uh, quantitative kind of confirmation,
Mm-hmm.
um, which yeah, which have more of these, which you can use it for good strategy. You know,
Yeah,
um,
absolutely.
yeah. What you should not use is something called Fibonacci, if you remember Fibonacci
Mm-hmm.
retracement.
Mm-hmm.
I don't like Fibonacci retracement because it is not quantitative. Fibonacci retracement is very, what do you call that? Um, Perception based. It's very subjective.
Okay.
So
Mm-hmm.
anything that is subjective, right? Unless you know it, unless you know it very well, like
Mm-hmm.
it's gonna be everybody's going to be thinking the same thing. Otherwise,
Uh-huh.
it's not useful. Anything that's too subjective is not quantitative. That doesn't give you a solid answer. It's not
Mm-hmm.
useful. Uh,
Okay.
yeah, some people do find success with this, but I don't think it's good because when your mental state is not clear and you're using something like this, which requires
Mm-hmm.
a lot of focus, right? Then
Yeah,
it's not going to work all the time. I'm not a fan of that.
got it.
So, um, and then there's chart patterns. Okay, let me show you one more time. Not chart pattern, the candlestick one.
Mm-hmm.
So you see in here, um, the, here's the hammer one, right?
Mm-hmm.
And then it close above this level.
Yeah.
So you
Mm-hmm.
see, it can be really reliable in many places. Of
Yeah.
course, you can see a short one in here, which
Yep.
yeah, and
Uh,
it
that
be,
was a false one because it was really quick. It ended,
yeah, yeah,
even though
and
it gave.
yeah, and that's the reason that I'm talking that because you need to be using quantitative strategies because, for example, this RSI is showing you, oh, the market's trending upwards, right? So if it's
Mm-hmm.
trending upwards, you will not take short trades in here, right? So you would only
Mm-hmm.
take
Yeah.
the long ones. So you would be profitable in here. You took a long in here because you saw a hammer candle, and then once
Mm-hmm.
again you saw another hammer candle, you took a long in here. So you would be ending up profitable. And if you don't use these quantitative tools altogether, right, you will be
Mm-hmm.
going short and long again. You'll be having a lot of
Yeah.
mixed bad signals, you know.
Mm-hmm.
So yeah, so this is how it works. Sometimes it doesn't work well, like here, you would have short in here, right? But it went back up
Mm-hmm.
for you. But
Yeah.
uh, it when it repeats, it can work. You know, like you can have bad trades one time, but the second
Mm-hmm.
time, like it also depends on the, if you remember, I told you risk to reward ratio, because this
Mm-hmm.
one
Yeah.
has high risk to reward ratio and the profitability rate. There's no one strategy that has 100% success profitability rate. Like this would happen, like these losses would happen, but
Mm-hmm.
you need to trust your strategy, and play along with it.
I was gonna ask you something.
Yeah.
Oh, I forgot. So usually, why do you think these like long VIX happen though? I'm curious.
Market manipulation.
Mm-hmm.
Um, it's just market manipulation, and um, you can say it's market manipulation, and it's also uh, uh, later when you learn about smart money concept, you would know like these are the levels where the banks try to uh, put their position in. They
Mm-hmm.
they call these order blocks. Order blocks are places where uh, big banks have put their buy limits or sell limits. And
Yeah. Oh,
with in smart money concept, this is what they what we try to do. What we try to uh, uh, sh- trade actually.
mhm.
Uh,
Okay.
yeah,
Okay.
yeah, but I'll show you that later.
Okay. Perfect. Another question that I had is, for example, if we're looking to risk only, let's say, 1% of the account per trade, let's say,
Yeah.
how many pips do you usually put your stop loss? Like if it's only 1% risk.
If you remember, I told you it's not about the pips. It's more about if you remember the average true range that I showed you before.
Yeah.
Yeah, the average true range is showing you the volatility uh, of that period in the market. So
Mm-hmm.
when the average volatility is low, let me show you once again. Average true range color to something white. So you see, like market is very volatile right now, right? So you will see
Uh-huh.
average volatility range is going higher in here. So
Mm-hmm.
we usually enter the market when average true range is low, like in here, because
Uh-huh.
in these levels the market volatility is low, and when you times two that, for example, in here, right, you wouldn't, you will not need a lot of pips in order to put your stop loss. But if you are trying to
Mm-hmm.
enter in here where market is moving very crazily, uh,
You would have to put a lot more pips down, right?
yes,
So it doesn't stop loss.
yeah, exactly. So it is not that how much pips that you would use for each trade. That is not a good way to look at it. Percentage is a
Okay.
good way to look at it, and using average true range to know like how much uh, uh, pips that you have to count. Because average true range is going to show you what amount of pips. It's going to be the value times two, which is 247 in here times two for
Mhm.
Bitcoin. Um,
Mhm.
and then you would adjust your lot size according to the percentage you want to risk.
Yeah, I got it. Yeah, perfect.
Yeah. So, any other question on this matter?
I think this is it for now.
Okay.
I did take a lot of stuff in. It was great. The call was great.
All right. Um, are you in a rush right now?
No, no, actually no.
Let me show you chart pattern a little bit, and then we're gonna finish this. Okay.
Perfect.
Okay. Um, there's also chart patterns that happens in the market. It's just another fractal way of looking at the market. Okay. Um,
Mm.
chart patterns is um, it's just like Wychoff theory, but it's just uh, zooming out even more. So
Mm. Oh
uh,
yeah, yeah.
yeah,
Pips also had these. Yeah, I remember.
yeah. So these are not very important. If you know it, it's cool. If you don't know it, uh, it doesn't matter because uh, these are not really profitable. These are not something that you can use it in quantitative way. Um,
Mm-hmm.
it's cool in a trending market, but if you just rely on these alone, right,
Mm-hmm.
it's not gonna be profitable.
Okay.
So if you learn about it, it's cool. In trending markets, there are bullish chart patterns, and in bearish
Mm-hmm.
there are bearish chart patterns that uh, look similarly, but um, um, yeah. And in there are reversal chart patterns, which you use it to see the bottoms, and then there are bearish chart patterns, reversal ones that use them to see the tops. Um, yeah, this is all about it, head and shoulders. But
Yeah.
with my experience, these really doesn't matter in real market, but it's just another way of looking at the market. Like people use it uh, for perceptions. It's just a
Mm-hmm.
perceptionism stuff. So some tips. Um, Again, I'm gonna stress this: it's best to use quantifiable tools to do your analysis. Avoid using
Mm-hmm.
subjective indicators. These are also subjective, not so quantitative, um, because
Okay.
chart patterns you cannot really define them. You can only look at them in the way that you think they are, and they
Mm-hmm.
like chart patterns. Is it this one, or is it ridiculous? You don't know if it's straight line or
Yes, I don't know for sure if it's the right thing you're doing.
yeah. So that's it for today. And I hope you learned something. If you have any question, you can let me know now. And
As of yeah, as of now, I think I asked what I needed to know,
okay,
but otherwise, it was a great call. Thank
sure,
you so much for taking your time.
no problem. So
It was
yeah,
a pleasure.
yeah, sure. It's also good, nice to teaching someone that learns very quickly.
Thank you. Thank you.
Yeah. So
That's
yeah, no problem. So yeah, that's it for today, and I hope you have a good day. And let's
same goes to you. What
yeah,
time is it there, by the way?
9:25 p.m.
Wow, it's late. It's late. You better go. You
Yeah,
better go.
it's over for me right now.
Have a great night's sleep.
Yeah, you
Take care.
too. All right, thank you. Goodbye.
Bye bye.
Bye.